Sunday, the 23rd of August 2015. I've got a chart here for the US dollar index. It's something quite important to keep in mind when looking at the commodity prices, that they're all valued in US dollars. So you need to know how the US dollar is faring. I guess the expectation has been that a raise in interest rates this year, and that's looking more and more unlikely as the days pass now. This is a historical chart of the US dollar index going back almost 30 years. And I guess the question, you can see this move in the last 9 months has been historically one of the most savage. I guess it's gone from 80 to 100 in less than 6 months there, and probably at the most, one of the most overbought positions in the history of this chart. So that can tell you it's probably one of the most crowded trades around, which is always sort of a worrying sign for me. And I guess the question is whether, if you look at this move I've drawn in here in the late 90s, the question is whether if we're here, whether we keep going up or we start falling back down away like all these other spikes have been in the last 5 years. And for mine, I think we're more likely to fall back down, just because my feelings about the US economy are not as that it's not in as great a shape as everyone tries to imagine. So if we go back to a daily chart, the action is starting to look very bearish actually. Just on Friday, it's closed below the 200-day moving average. We've got this sort of double top here. If you can't count this as sort of a single top, then it looks like it's going to come back and test this level around 93.50. And that's if it breaks that, I think there's definite possibility of back to the high 80s at least. There's a bit of a congestion zone here, so potentially there might be act as a next support level. And if it does that, I think you'd expect the gold price in US dollars to be above 1,200 US an ounce. The other thing is, if you think about it in Australian dollar terms, the US dollar index is mainly historically, when the US dollar index was doing poorly, the Australian dollar would have been doing quite well. But with a lot of the China worries, the Australian dollar is now tied more to China. I feel so. The Australian dollar gold price might stay up even if the US dollar index starts to decline, which would be a perfect scenario for the Australian gold producers if their margins can increase as well. So something very much to be aware of, and the technical signs are quite bearish at the moment for the US dollar index. Another thing I saw this week that I thought was quite interesting was this chart that I got off Zero Hedge, just showing how economists are really clueless when it comes to the interest rate rises and how they're constantly predicting interest rate rises. 75% thought the Fed would have raised interest rates by July and August, and 95% thought that the Fed would have raised interest rates by the September meeting. And you can see how those predictions have been constantly wrong, and 80% are still predicting an increase in interest rates in the September meeting, which after the price action this week in the US share market looks increasingly unlikely. So I think it's just important to realize that all these predictions about the strength of the US economy have been wrong for quite a while, and this is not unusual. This is exactly what caused moves in the US dollar index previously, where it spiked up and then went straight back down in the last 5 years. So keep that in mind when you constantly see all the bullish information about the US economy.